Alrighty, hey y'all, happy Thursday. We are gonna go ahead and get started. Thank y'all so much for y'all's patience. Again, I am working from my iPad. Uh, Allison said I can't hear. Can you guys hear me okay?
Yes, we
I
can.
can.
Okay. Allison, maybe try to turn your volume up. Um, Okay, so we are going to go ahead and get started. Welcome, everyone, to the Fundamentals of Finance Series 4. I'm super excited about the information that I'm going to be sharing with you all tonight. Here's just a little bit about me. I'm the founder of iTax Solutions and iTax Institute. I launched a mobile tax preparation business in 2009, and it grew into a seven-figure tax firm. In 2018, I founded iTax Institute, and to date, I've trained over 500 entrepreneurs in launching a successful tax preparation business. I also assist business owners in other industries as well. I earned my bachelor's degree in 2010 from the University of Texas at Arlington. I earned my master's degree or my MBA from Texas Women's University in 2012. I received a doctorate in 2023, and I am dedicated to uplifting others through financial education, business coaching, and philanthropy. I just want each and every single one of you to know that I am always, open to sharing information with you guys. So if you ever have any questions, feel free to shoot us an email, or I do offer free 15-minute consultations if you have questions about taxes or business or anything of that sort. So if this is your first time here, you may be wondering, what is the Fundamentals of Finance series? The Fundamentals of Finance series is a free webinar series I designed to educate taxpayers and small business owners navigate essential topics like taxes, business structure, funding, financing, and bookkeeping. I'm sharing what I've learned over the last 20 years as a business owner as well as a tax professional. So if you find this lesson helpful, be sure to pass it along to a friend or colleague who might benefit as well. And I just recently threw on this hat for real estate investors. So that is why I'm running a little bit behind today. So we had to check on some properties and I had to go buy some stuff. So I'm just like all over the place, but I am here. So thank y'all again so much for bearing with me for my tardiness. So we'll get moving. Who is Fundamentals of Finance Series 4? This series is for anyone, whether you're a taxpayer, a small business owner, or just someone looking to pick up financial knowledge they didn't teach us in school, but we all need to know that is essential. I'm not expecting anyone to leave these sessions as a tax expert or a business funding wizard. This is more about giving you the core knowledge you need to feel more empowered when it comes to your finances. And if there's anything unclear or you have questions, be sure to write your questions down and I'm here to help. So we will have a live Q&A at the end. What should you bring to the Fundamentals of Finance series? It's simple. Just bring something to write with so you can take notes and refer back to them later. And come ready to learn with an open mind. We're here to make things practical and easy to understand. What is the objective of Fundamentals of Finance series? The objective here is pretty simple: to provide clear, accessible education on topics like taxes, business funding, and investments through a series of webinars. We're going to tackle a range of topics that would be helpful for anyone managing their own finances or running a small business. As the series progresses, I'll also be bringing in guest speakers who are experts in areas beyond my own specialty. So you'll have a chance to hear from other professionals who can offer new perspectives and deeper insights. When is the Fundamentals of Finance series? We're live here every other Thursday at 7 p.m. Central Standard Time. So be sure to mark your calendars and join us for the next session. If you can't make it to the live webinar, no worries. The replays are posted on the YouTube channel within 24 to 48 hours, so you can catch up anytime. Also, be sure to like and subscribe to our YouTube channel so you don't miss any updates. So we have a couple house rules. First and foremost, please keep your microphone muted unless you're speaking. Next, avoid using offensive or discriminatory language. 3, if you have any technical issues, be sure to use the chat to report them. If you have any questions they'll be answered at the end of the presentation. So just be sure to write your questions down. And again, we'll have the live Q&A at the end. Lastly, be sure to have your notebook ready to take notes. Alrighty, so let's go ahead and get the ball rolling tonight. Again, welcome, welcome, welcome to Series 4, Fundamentals of Finance, Mastering Your W-4, How to Optimize Tax Withholdings, presented by yours truly, Dr. Ambria Lacey. Let's get into this. Okay, so Form W-4. So the Form W-4, also known as the Employee's Withholding Certificate, is a crucial document that helps determine the correct amount of federal income tax to withhold from your paycheck. So now we're going to take a look at Form W-4, okay? So this is what this actual document looks like. So if you are, starting a new job, or anything like that, this particular form will be available for you. So typically an employer will provide this to you. So as you can see, there are a couple of different sections here. Section 1, Section 2, Section 3, Section 4, and Section 5. And I'm gonna break that down in a later video. And remember, you can always find any of these tax forms directly on irs.gov. So here are the other pages. So the purpose of the W-4 form. This particular form informs your employer about your personal tax situation, including filing status and dependents. It allows you to specify the amount of federal income tax to be withheld from each paycheck. Also helps prevent over or under withholding, which can lead to a large tax bill or a smaller refund at the end of the year. It also ensures that you pay the right amount of taxes throughout the year, aligning with your actual tax liability. The importance of accurate withholding. Prevents you from owing a large sum to the IRS when filing your annual tax return due to under withholding. Now, sometimes people will not withhold enough taxes when they're paid. So as you all know, when you receive your Form W-2 from your employer, right, typically box 1 will have the full amount that you were paid for the entire year, pre-tax, right? And box 2 will show how much that was withheld. So I typically tell individuals that you should get around at least 10% withheld if you're kind of doing the right thing. And it also kind of depends on your tax bracket as well. But typically, let's just say if you made around $50,000 for the entire year, once you receive your W-2, then if you get around $5,000 withheld, you should be good, right? You should be good for the most part. Now, again, it does depend on your filing status, how many dependents you have, if you're going to itemize your deductions, or if you're going to take the standard deduction. But sometimes people do not get enough withheld. So if you find yourself looking at your paycheck stubs, which we're going to take a look at an estimator tool. We're going to walk through an estimator tool together. If you find yourself not getting enough withheld, you can always adjust your withholdings throughout the year. Okay. So most people, I think, typically either you can go to your human resources department, or you may be able to have like an online portal that you can log into so that you can change that information. So don't ever feel like, oh, I don't want to bother my human resources department, or I don't want to bother my employer, because at the end of the day, as a taxpayer, it's your responsibility to make sure that you are getting enough withheld, or if you're not, getting too much withheld. So we're going to go back to the importance of accurate withholding. Avoids the need to wait for a refund if you over withhold, allowing you to keep more of your money throughout the year. So some taxpayers, I tell my clients all the time, some will say, well, did I get enough withheld, Ambria, or should I get more withheld? What I feel like as an individual, also as a single mother, that you know your tax situation or your financial situation better than anyone else. So with that being said, if you need more of your money, during the year to pay your mortgage or your rent or your car payment or to take care of your children, right? And you have dependents to kind of offset it, I feel like it's okay because you want to make sure that you're paying your bills every single month. You don't want to find yourself so concerned about getting taxes withheld that you're not making your monthly payments for your bills or taking care of your monthly obligations. So that is why this is very important to have this estimator. And also, if you guys need additional help or like, hey, I did the estimator, but I still would like some advice, what do you think I should do about that? Again, I do offer a free 15-minute consultation. So don't be afraid to book that free 15-minute consultation. Next, helps you meet your tax obligations and avoid penalties for underpayment of estimated taxes, and allows you to better manage your cash flow and budget by having the correct amount of taxes withheld from each paycheck. Okay, next slide. So when to complete Form W-4. When starting a new job, they'll give it to you automatically. If you have multiple jobs or your spouse works, if you have dependents or qualify for tax credits, if you have significant non-wage income, such as interest, dividends, or self-employment, or if you experience a major life event such as marriage, divorce, or the birth of a child. And again, you can update this form at any point in time during the year. Also, I would recommend, like, if you find yourself getting like a big bonus, or if you get a new job or a new position and your salary significantly increases. I had a client, one year I prepared her taxes and she was making like $50,000. And the next year she sent over her W-2s and she made like $275,000. And I was like, first of all, congratulations. But we had to have that conversation like, okay, now you're in a completely different tax bracket. This is what we need to look at. So make sure that, again, if you get a raise or anything like that, that you take a look at that Form W-4. And she actually was over withholding. She got a lot withheld. So we were able to change that. But the good thing about it, she was able to get a pretty nice refund. Okay, next slide, please. We're gonna go through the step-by-step completion of this Form W-4. I'm not sure if you guys remember, but a few years ago, this form did change. So that's why this is very important to know how to complete this. So step one, you have the personal information. You'll enter your full name, your mailing address, and your social security number. You'll also select your filing status: single, married filing joint, married filing separately, head of household, or qualifying widower. And if you're unsure about your filing status, then you can always refer back to one of our, I think our very first Fundamentals of Finance Series 1, we break down filing statuses. So here's just an example of what that would look like. So next, step two, multiple jobs or spouse works. If you have more than one job, or if you're married filing jointly and your spouse also works, check the box in step two. Use the tax withholding estimator on the IRS website to determine the total number of allowances to claim across all jobs. So this is what section 2 looks like. You'll just check that box if you had more than 2 jobs. So when you're interested, and I mean, I really think that you guys should do that tonight, or in the next day or two, if you have your paycheck stubs from your job, or you can access them on your phone or through your email or something like that, feel free to grab those. We're going to go through this estimator tool together. In order to access that estimator tool, you can simply go to irs.gov, and on the very front page, right there in the middle, it says check your federal tax withholding. So the tax estimator, it's basically just going to walk you through a bunch of steps. It asks you a lot of questions. Again, This is what you need, your paycheck stubs from all of your jobs. If you have any additional income, such as a side hustle or you have a business, you also want to have that information as well. So we are going to do a quick example. So give me just a moment to access the IRS website, because again, I am working on this iPad, y'all. So let's see, I'm going to go to irs.gov. Then I'm going to click on check your federal tax withholding. And this particular paycheck stub, this is a paycheck stub that I created. And what I want each of you to be able to see with this particular paycheck stub, if you are grabbing your own paycheck stubs, the information that's important is for you to know what your current amount that you were paid on this particular paycheck stub. You want to get your most recent, right? So if you got paid last Friday or something like that, get your most recent paycheck stub. All right. The year to date is very important as well. You'll need that information, as well as how much federal income tax is being withheld. Now, this particular estimator does not calculate anything for any state taxes. So if you are in a state that has state taxes, make sure you go to your state's website and you can also calculate this as well. So let me share my screen. Okay, let's see. All right, let's click on share. Tony, let me know. Okay, screen. Website URL. Let's see. Okay, so here we go. So can you guys see my screen, the IRS screen? I just want to make sure.
No.
Yeah,
Is that a yes or no?
I see the tax withholding estimator screen.
Okay, yes, that's perfect.
I
So
just see your screen with your statement on it. With your earnings statement.
okay, so you may have to, I don't know, swipe to see my screen, but it shows that I'm sharing. So Tony, you can see the tax withholding estimator. Can everybody see the tax withholding estimator that I'm sharing on irs.gov?
Yeah.
Okay, perfect. So we're going to go ahead and get into this. So it just kind of gives you some brief instructions. We're going to click on use the tax withholding estimator. So I am going to use this example for myself. All right. So when I file my taxes, it's myself as well as my daughter, who is my dependent. So my filing status is head of household. So you'll select your you'll select your filing status. The next question, it says, do you have a job or a pension that regularly withholds federal income taxes from your paychecks or pension payments? So this particular paycheck stub, it shows that I have one job and I've been there the entire year. So we're going to select yes. Select any that apply. I plan to claim dependents on my tax return. I will be 65 or older on January 1st. I am blind, or I can be claimed as a dependent on someone else's tax return. So for this example, I plan to claim dependents on my tax return, which will be my child. So here, it asks you to enter information for each job and pension you will receive income from for this year. To use this tool, you need to have a job or a pension subject to tax withholding. If you have Social Security income and you prefer to have tax withheld from your job or pension to cover that additional income, select 2 or more sources of income and enter information for your job or pension first. After that, you will be able to enter your Social Security income. So we're just going to show that I have one job, an hourly pay, and I was there the entire year. Okay. So whatever your situation is, then you'll make sure that you answer these questions accordingly. How frequently are you paid? In this particular example, it's weekly. When did your most recent pay period end? Let's see what date is on here. Thanks. Probably a bad idea for me to switch over. Tony, what was that date? The 18th? I think it was the 18th on that example.
Yeah, 18th.
Or no, the day the pay period ended. I think that's okay. So I think on that particular example, the pay period ended on the 12th and the pay date was on the 18th. So next you'll make a selection. It says select the option that best describes your current situation. My last paycheck was a good representation of how much I earn on average every pay period. So if you pretty much work the same amount of hours and get paid, your hourly wage, and you're typically gonna, work your 40 hours a week or your 80 hours biweekly or your overtime, whatever the case may be, and your pay is pretty consistent, then you would select the first option. If maybe sometimes you work 10 hours a week and maybe another week you work 30, 40 hours a week, then you would select the second option. My paychecks vary week to week. Averaging 2 to 3 paychecks would provide a more accurate picture of how much I make. So we're just going to go with this first example here. So enter wages per pay period. So in this particular example, we're getting $800 weekly. And the wages earned year to date, what is that amount, Tony? I'm so afraid if I move it, I might mess something up. Was it 34,000 or 33?
33,600.
Okay, perfect. 33,600. So next it'll do a little calculation here. Now you want to make sure when you enter this amount, the 800 and the 33,600, this is the amount before any taxes are withheld. Okay, before any taxes are withheld. It's very important that you use that amount. Based on the information provided, it looks like your total income from the job this year will be 41,600. Is that correct? Yes. So next it will ask how much federal taxes were withheld per pay period. So typically when you have your paycheck stub, it will say current and then year to date. So you should see federal income tax or federal withholding taxes or something like that. So you'll see a column that tells you how much for the current paycheck and then how much for the year to date. So currently, was it 6410 for that particular pay period? Does that sound right?
Yes.
And the amount paid per year year to date.
2,692.
Okay. All right, so make sure you enter that information accurately. So next, it asks you to select any that apply for this job. If you contribute to a 401k, you'll select that box. If you contribute to a health insurance plan, HSA or FSA, you'll check that box. And I just want you to also notice that there are some little question marks here. So if you have questions about any of these selections, you can always just click on the little blue question mark, and it will give you some insight. If you're getting a bonus, if you got a bonus, right? So if you got a bonus, it's going to ask you for that bonus amount. So we're just going to select none of the above for this particular example. Next, do you have any other sources of income? For this example, I am a full-time W-2 employee. I do not have any additional self-employment income. So that would be none of the above. Next, withholding and estimated tax payments on other sources of income. Since I don't have any other sources of income, this is actually just going to be 0. And then it asks if you paid any estimated tax payment amounts. Okay, so if you did, then you would enter that information there. If not, we're just going to enter in 0 and click on continue. Next, we have adjustments. Adjustments to income. Adjustments reduce the amount of income subject to tax. Many taxpayers don't have large enough adjustments to income to have a significant impact on their tax obligation. Select any adjustments to income you plan to make when you file your 2024 income taxes or go to the next step. So if any of these apply, student loan interest deduction, educator expense deduction, deduction for contributions to I can't even talk. Deduction for contributions to traditional IRAs, health savings account deduction, moving expenses for members of the armed services, any alimony paid, penalty for early withdrawal of savings, or certain business credits for reservists, performing artists, and fee-based government officials. If none of those apply, then we're just going to click on next. Standard or itemized deductions. So the standard deduction is $21,900 for a head of household. So we're just going to keep that there. Unless you are itemizing your deductions, we do have a breakdown of itemized deductions on a previous Fundamentals of Finance series. I think that was for series 3. So if you have questions or want more information about the standard or itemized deductions, feel free to refer to that. But for this example, we're just going to use the standard deduction. Let's see. So even though my daughter's older, I'm just going to put that she's a little bit younger for this example. So here you'll indicate your age, and then you'll enter the age the child will be on December 31st, 2024. If you have multiple children, then you'll enter that information, okay? If you need to add another child. Enter the number of qualifying children for the Child Independent Care Credit. So in order to claim the Child Independent Care Credit, the child has to be under the age of 13. So if that doesn't apply, then you don't need to worry about anything for that, okay? So that gives you that information there. If so, then you would enter the number of children and how much the child care expenses are. So for the Earned Income Tax Credit, this is limited to 3 qualifying children. The child is 15, so we're just going to put in 1, okay? So how many ever dependents that you are claiming for the Earned Income Tax Child Credit, then you'll put that number there. We're not doing anything with the adoption tax credit, so I'm just going to enter 0. Foreign tax credit, that doesn't apply. Educational, that doesn't apply. But if so, if you have any dependents or taxpayer or the spouse that is claiming the American Opportunity Tax Credit or the Lifetime Learning Credit, then what you're going to do is you're going to put that information there, okay? Let's see. Sorry. Uh-oh. So next, retirement savings. If none of that applies, then you can just skip right over that. If you have anything from the retirement, be sure to put that information there. Homeowner, residential energy credit, mortgage interest credit, elderly or disabled, you'll enter that information there. Business, you'll enter that information there. Alternative minimum credit, you'll enter that information there, or energy efficient vehicles. So if none of that applies, then you will click on next. Okay, let's take a look. So we have our results for our tax withholding estimator. Use your best estimates for the year ahead to determine how to complete Form W-4 or W-4P so you don't have too much or too little federal income tax withheld. So here, let's take a look at our results. Based on the information you entered, you don't need to withhold tax from your paycheck. You don't owe any tax this year. You will get a refund of any overpaid tax you withheld when you file your tax return. So expected tax withholding around $3,332. Tax before refundable credits, $36. Estimated refundable credits, $11.96. So projected refund. Now, let me just say this, y'all, okay? this is not an exact estimate of what your tax refund amount will be for the upcoming tax season or for any tax season when you're utilizing this tool. The key to this tool is just to understand whether you are overpaying with overpaying, you're over withholding, or if you're not getting enough withheld. You do have people who will go exempt. Okay. Now, I have clients that will go exempt for the entire year, and they want me to make to work a miracle. It happens sometimes, and sometimes it doesn't, right? So that's just what this tool is for. I don't want anybody to think that this is what you're looking at for a potential refund amount, because the entire reason for the tax code is for you to utilize these tax laws and standard deductions, itemized deductions. When you know about all of these things, that's what helps you to reduce your tax liability. Okay. So here's a suggestion. It says to increase your take-home pay, set your withholding to 0. Submit a new Form W-4 to your employer or pension provider with the changes suggested. Excuse me. If your income changes in the future, be sure to use this tool to check your withholding again. So basically what it's saying is that, hey, based on what you've already had withheld, you're getting a pretty good amount, withheld every pay period. We don't see that, there will be an issue with you owing taxes. Now, I want you guys to also understand as well that when you have dependent children, that can also help to offset that. So most people will say, like a few years ago, before they kind of changed the form, the less exemptions you had, the more taxes that were withheld. So previously, if you only had a couple of exemptions, like 1 or 2, they withheld more from your paycheck. So some individuals that I see that were, maybe single mom, had a household with maybe 2 or 3 children, they got less withheld from their paycheck because, again, the children will offset that when it comes time to filing your taxes. Now here, what you can do is this just kind of gives you the breakdown of the Form W-4, like how to complete it. I think that we did go through this. Okay. So for this particular example, if I was completing my Form W-4, it gives the personal information, claim dependence, step 3. There weren't any additional adjustments, and then you would just simply sign and date this. So that is basically the estimator tool. Let me take a look and see what this says. Here it just kind of maybe gives some examples. So make sure you take a look at that based on your results from the estimator tool. And again, if you have questions about any of this, I do offer free 15-minute consultations. So if you're like, hey, Ambria, should I do this or should I do that? If you still have questions, then feel free to book that free consultation. So we are going to go to the next example. So let me see how to start over and do this again. So we have another example, and in this particular example, basically the individual, basically the individual did not get any taxes withheld, okay? And this is very, very common. Can you guys see the example? Let's see. This person, I think it was bi-weekly. What is the date on that pay period ending, Tony?
From October 7 to October 20, and the pay date is October 24.
Okay. And the wages per pay period, is that 3,200? Okay.
Yes.
Yeah, I see how I can kind of make this. Oh God, why did I do that? Okay, what is the year to date?
4,166.40.
Hang on. I think it's 62059. Is that right? Yeah, 620. No.
Yeah, the
Year to
net
date growth,
base.
67.2. That's what it is. 67,200. Okay.
Yeah.
Based on this information. So based on this individual getting paid around $3,200 every 2 weeks, the estimator is saying, okay, by the end of the year, you should make around 80 grand. Okay. They didn't get any taxes withheld and they don't have any children. Let's see, none of the above. Now, as a tax professional, if this individual is single, no children, it doesn't mean that they may own their home. I would probably ask this question as a tax professional, a lot of questions to see if we are able to itemize their deduction because their standard deduction is going to be so low. So I would probably just kind of see if they had, any student loan interest. Hopefully they own their home. That would be great for them. But for this example, we're just going to say none of this applies because the standard deduction is 14.6. So we're just going to say that they are using the standard deduction. They don't have any of this. Okay. So here are the results from this individual. Single, no children, didn't have anything withheld. So this may be an example for someone who goes completely exempt, right? Based on the information you entered, you're not withholding enough tax. It's too late to make up the difference through withholding and you may owe a penalty. Wow, IRS, just no hope, right? Expected tax withholding, 0. Anticipated tax obligation, $9,447. So as mentioned previously, I usually like to see at least about 10%. So an individual who is single, no children, if they don't have any itemized deductions, they should at least be getting 10% withheld. So at 80 grand, the IRS is saying, hey, you should have, in your tax brackets, a little bit more than 10%, you should have at least withheld almost $9,500. Or I'm sorry, you're potentially going to owe us. So basically the IRS is saying, hey, you made money and you didn't give us our percentage. So since you didn't give us our percentage during the year, we're just going to take it or, give you this tax bill, right? And tell you that you owe us at the end of the year or when you file your taxes. So let's see. Important message from the IRS. Caution, we estimate that this is no longer possible for you to have enough federal income tax withheld this year to fully pay for the tax you owe at the end of the year. To avoid owing tax when you file your tax return next year, you should consider making one or more estimated tax payments before the end of the year. IRS Publication 505 provides helpful information about making estimated tax payments. So some individuals who are self-employed will make estimated tax payments. And basically that's saying that, hey, you know what, I'm a self-employed individual and, maybe my company is earning $100,000 and instead of me getting this huge tax bill during the year, quarterly, I'll send in a certain amount. Okay, so that's what estimated taxes are. So make sure you guys utilize this estimator. If you're unsure what your tax, if you're unsure about how much you're getting withheld, if you need to get more or less, because if you're getting too much withheld, guess what? You can go adjust that and get more money, especially with the holidays approaching. So I know for myself, I also suggest to some of my clients the first half of the year, January through June or July, right? If you're expecting a refund, you're kind of bouncing back from the holidays, maybe not as many expenses as the second half of the year when we have to, maybe buy school clothes for children, kids are out of school for the summer, we have the holidays, all of that. Some people will get more withheld the first half of the year, and around the summertime, they will change it for the second half of the year to get less withheld. So you really just have to kind of take a look at your situation and figure out what works best for you. So we are going to go ahead and get back to the presentation. Let's see. I think I stopped sharing my screen. Okay, so can everybody see the paycheck stub, the example of the second paycheck stub that we looked at?
Yeah.
Yes.
Okay. Okay, great, great, great. Okay, so we'll go ahead and move on to the next slide. Step 3, claiming dependents. If you have dependents, enter the total number of qualifying children under age 17 and other dependents. The child tax credit and credit for other dependents are calculated based on the information provided in this step. Here's a look at what section 3 looks like, or I'm sorry, step 3 looks like on form W-4. So you have to do a little bit of math here, okay? So you may have to break out your calculator, the number of qualifying children that you have under age 17, you'll multiply that by 2,000. And if you have any other dependents, you will multiply that number by 500. Next slide. Step 4, other adjustments. So step 4A, enter any other income you expect to earn that isn't subject to withholding, such as interest, dividends, or self-employment income. Step 4B, enter the total amount of deductions you plan to itemize on your tax return, such as mortgage, interest, charitable contributions, and state and local taxes. Step 4C, enter any additional amount you want withheld from your paycheck. Now, some individuals decide to just get a flat amount or a flat amount or a standard amount just withheld from each paycheck, or like an additional amount from what's already been calculated. So the good thing about it, I mean, step 4A and 4B, most people are not really going to know, okay, this is how much I'm going to receive in interest and dividends, and this is how much, my mortgage interest is, and this is how much I'm going to, donate for charitable contributions. Most people are not going to know that. So don't stress yourself out about those things. That's what your tax professional is for, to provide that information to them and to enter that information. Not entering that information on the withholding estimator is not going to make a difference. Once you provide it to your tax professional, it will only reduce your tax liability more. So it will only help you. So worst case scenario, your situation may look a little bit worse, on the estimator than once you provide all of your information to your experienced tax professional. Next slide. Then you'll just sign and date the form and return it to your employer. Really, really simple. Remember, the more allowances you claim, the less tax will be withheld from your paycheck. Claiming fewer allowances will result in more tax being withheld. If you have a complex tax situation or you're unsure how to complete the form, consider consulting with a tax professional or using the IRS withholding estimator for guidance. Next, we're going to talk about optimizing your tax withholdings. Be sure you understand your tax situation. Be sure to evaluate your filing status, your income sources, and deductions to determine the appropriate number of allowances to claim on Form W-4. Also, be sure to consider any major life events such as marriage, divorce, or birth of a child, which may affect your tax situation. Again, you'll access the IRS website and click on the Federal Withholding Estimator tool to complete this information, irs.gov. Next slide. Be sure to try to avoid common mistakes such as claiming too many allowances, which can lead to underwithholding, resulting in a tax bill when you file your tax return. Claiming too few allowances can lead to overwithholding, resulting in a larger refund but less money in your pocket throughout the year. So that's kind of what I discussed earlier. So make sure you understand your financial situation and you budget appropriately throughout the year. Failing to update your W-4 after a significant life event can lead to inaccurate withholdings. Be sure to review your W-4 periodically, access the withholding estimator, and to submit a new W-4 to your employer if you need to adjust your withholdings. Here are some tax saving strategies that you should consider. Contribute to a tax advantaged account such as a 401k plan or health saving account to reduce your taxable income and potentially lower your withholdings. Also, take advantage of eligible tax credits and deductions to minimize your tax liability. Life changes in your Form W-4. When you get married, you may choose to file jointly with your spouse, which can affect your tax rate and withholding amount. Update your W-4 to reflect your new filing status, as this may allow for different withholding rate. Also, keep in mind, when you do file jointly with your spouse, that there are some tax credits that are reduced or not available. A divorce can also change your filing status and potentially your tax bracket. You'll need to submit a new W-4 to adjust your withholdings based on your new financial situation. Having children. The birth or adoption of a child allows you to claim additional dependents, which can increase your tax credits. Be sure to update your W-4 to reflect these dependents, potentially lowering your taxable income and increasing your take-home pay. Changing jobs, starting a new job or changing jobs that affect your income level and tax situation. When you begin a new job, fill out a new W-4 to ensure your withholdings are accurate based on your current salary and any other income sources. If your spouse starts or changes jobs, this can alter your household income, right? Or if your spouse loses a job, right? That is a significant change. So you want to make sure that you are adjusting your W-4s if that happens. Again, update your W-4 after major life event changes, starting a new job, and also just reviewing it annually. I would actually probably recommend reviewing your W-4 semi-annually, at least twice a year. I would do it twice a year, to be honest. At the beginning of the year, maybe 3 times. At least twice a year. Next slide, please. Okay, quiz time. Let's get into the quizzes. You guys ready? Be sure to get ready to put your answers in the chat. Question number 1, what is Form W-4 also known as? A, employer's tax deduction form. B, employee's withholding certificate. C, federal tax payment document. Or D, employee's wage verification form. Okay, I see B in the chat, B in the chat. What is Form W-4 also known as? That is correct. If you answered B, employees withholding certificate. Yay, congratulations to everyone who got that question right. Next question. In which of the following situations should you complete Form W-4? A, when starting a new job. B, if you have dependents or qualify for tax credits. C, if you experience a major life event such as marriage or divorce. Or D, all of the above. In which of the following situations should you complete Form W-4? Looks like I see D in the chat. The answer to question number 2 is D, all of the above. Any of those situations apply, be sure to review that Form W-4. Question number 3, which tool can help determine the optimal number of allowances to claim based on your specific circumstances? A, the IRS tax return calculator. B, the IRS income estimator. C, the IRS tax withholding estimator. Or D, the IRS deduction analyzer. I see C in the chat. Okay, let's take a look and see what the answer is. It is C. Congratulations to everyone who answered C, IRS tax withholding estimator. Next question. Failing to update your Form W-4 after a significant life event can lead to inaccurate A, deductions, B, credits, C, withholdings, or D, refunds. I see C in the chat. C in the chat. C, 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 C. Okay, looks like everybody is going with C, withholdings. Let's take a look at the answer. Yay, C, withholdings. Question number 5. Claiming too few allowances can lead to overwithholding, resulting in a larger refund but less money in your pocket throughout the year. Is that true or false? Claiming too few allowances can lead to overwithholding, resulting in a larger refund but less money in your pocket throughout the year. Okay, I'm seeing a lot of true. And the answer is A, true. So that completes all of our questions for the quiz. And remember to access that IRS estimator tool. You always can go to irs.gov at any time. Now I'm going to go ahead and open up the floor for live Q&A. So if you have questions, be sure to type your questions in the chat, and I am going to access the chat so that I can see the question. So Tanisha has a question. So if you are single and want to switch to a lower status, what would a person do? So single with no dependents, are you asking if you want to change the amount that you're getting withheld, or
So
change
for instance,
filing?
in your the first deal, you know how it was looking pretty good and maybe they could have stopped doing what they were doing. So let's say half the year I already did what I had to do and it's looking pretty good, but the other half I might can start taking home a little bit more money. But I'm already single, I'm already with no kids. Do I just bump it up to like married filing jointly so that I can get more on my check? How do I get the more in?
So you wouldn't, I see what you're saying. So you're asking, do you change your filing status on the Form W-4 in order to get more or less withheld?
Mm-hmm.
So you wouldn't necessarily change your filing status. So did you see where it asks about the dependents?
Okay, so right there you would just put some
So
dependents in.
yeah, so in
Okay.
that section, so that's kind of like back in the day when they had the exemptions and either
Exactly.
would do, yeah, so that's
I miss
where the
that so
confusion,
much. Jesus.
yeah, so that's where the confusion came in. So that's kind of really pretty much the same thing. So you wouldn't change the filing status. What you would do is you would just kind of show like, okay, well, you know, I have more qualifying dependents, which means that you would get less withheld. Or
Okay.
if you wanted to do it the opposite direction or the opposite way, then you would show that you have less dependents to get more withheld. Yeah.
Well, I think if you're single and you want them to take out more, then maybe would that go to the line where you would just ask for a certain amount or
Or you
percentage to
could
be
just
taken
put
out?
yep, you took the words right out of my mouth. So that
Okay, yeah.
you could do as
At
well.
least for single. Okay.
Yeah, you could just say like, okay, well, hey, like, you know, take an additional 500 or 300 or, you know, whatever amount you want to do. So when you hear single individuals that are like, man, I never get anything back on my taxes, The reality of it is that, you know, you can make that adjustment on your W-4, but I ask people all the time, is it more important for you to be single and get your money throughout the year and maybe get a small refund of less than $1,000, but you don't owe the Internal Revenue Services? Or are you looking to get paid less money because throughout the year, because you're going to get way more withheld and get, you know, a fraction of that money back, to be honest, you know, when you file your taxes. So it's definitely something, you know, for people to consider. Let's see. I hope that answered your question, Tanisha, and provided more insight to everyone. Next, let's see, Angelica, how is this applied if someone moved to another state within the year? Just curious, my current situation, I looked at my withholding and the state tax and it doubled. So this is just based on your federal taxes. It's not based on your state taxes. So with your state, I would just suggest that you go to your state's website and take a look at their estimator tools and see what it is that they have, you know, and it just depends on, you know, what your state tax is. So this tool again is only for federal withholding. Let's see, next question. The calculator asks you to enter retirement withholdings, but we have profit sharing where 3% of my salary is auto invested, but it's not a 401k. Should this be entered anywhere on the calculator? Retirement withholdings. I would suggest, and you said it's not a 401k. So I wouldn't, you don't have to enter everything there. Like they ask all of those questions on that estimator, but the average person does not have all of that information in front of them. I would suggest leaving it off because again, if you are, you know, getting things withheld from your retirement, then that will help you. I'm not sure also like what additional income you have if you're married, what your spouse makes. I know all of that will make a huge difference, but I personally, just based on the estimator, I probably wouldn't include it. Next, can owing taxes keep someone from buying a house? Ooh, great question. So yes and no. What I've learned through my home buying process is that, and also my clients as well, if you provide a federal tax return to the mortgage lender and they show that you had a tax due, so you had a tax bill or you had a tax liability that you had to pay to the Internal Revenue Services within the last 2 years. So if your 2022 tax return shows, oh, okay, well, you owe the IRS, you know, $6,000, right? Then they're going to say, we need you to show us proof that either you are on a payment plan or you have a zero balance. So that's what I've seen across the board with mortgage lending in the last year. Now, does your balance keep you from owing like the exact amount? I don't think so, but I think that somehow it is factored, that payment amount that you're, you know, or that payment arrangement, that payment amount that you have that you're paying to the Internal Revenue Services. I think somehow that does affect the debt to income ratio some type of way. Now, I don't know the calculation or the algorithm or whatever, but that does affect if you're purchasing a home. I hope that answers your question. Did anybody else have any questions or need any additional clarity on the questions that were answered or asked? Okay, Tony, let's go to the next slide. So again, if you have questions about anything, I do offer the free 15-minute consultations. Feel free to scan this code to schedule one of those. If you are interested in starting a tax preparation business, then you would click on that first link there. be sure to register. The next link is for registering for the next Fundamentals of Finance series, which will be on November 7th at 7 p.m. If you want to get more information about business grants, we have that there. You can also click on the following link if you're interested in becoming a client in 2025. I do offer free tax quotes, so there's no obligation whatsoever. Once you have all, I repeat, all of your tax documents, you can click that link, or actually you can go ahead and provide us your name, phone number, and email address, and we'll send you an email once we open up to start accepting new clients, which I think this year will be on January 2nd. We'll send you over an email, but make sure you have all of your tax documents when you submit that information. It helps us to stay organized, and it helps me to also give you the best quote possible. Also, I want to remind each and every single one of you that when you are getting your taxes prepared with a tax professional, you must provide your official W-2 forms and your official 1099 forms. If someone is telling you that they can file your taxes with a paycheck stub, run, because that is absolutely illegal. Okay. I just want to put that out there because I see a lot of people like, oh, I can, can you file my taxes with my paycheck stub? Well, no, I can't, because it's illegal. And sometimes what can happen, even if we provide you with a quote based off of your paycheck stub, it can change, because on your W-2 form, there's additional information that is reported that helps us to reduce your tax liability as much as possible. The iTax Solutions website is there. Next slide. So y'all be sure that y'all are here for the next Fundamentals of Finance. If you don't mind, please, 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 your feedback, your suggestions, all of that is very, very important to me. It helps me to know what it is that you want to learn more about. Lets me know how I'm doing, what I can do to get better, or how I can improve, whatever the case may be. I value each and every single one of your feedback. So feel free to scan this QR code and complete that survey. It's going to ask you again what other information you are interested in hearing about and learning about in the Fundamentals of Finance series. Again, this is something that I'm going to continue. I really, really do look forward to this every single Thursday. I'm really loving this. I'm hoping that maybe after the first of the year, as we kind of push through tax season, I will be able to do this weekly, right? I'm really looking forward to it. It seems like bi-weekly is just not enough. So again, please provide your feedback, and you'll be entered into a drawing to get a free gift card. I think we've given away like Amazon and Target gift cards so far. So if you win, we'll reach out to you, show our appreciation, show our love, because we appreciate you taking time out of your busy day to give us your feedback, and we will send you over an electronic gift card. Next slide, please. And again, thank you so much for attending the Fundamentals of Finance series. Our next series is going to be on November 7th at 7 p.m. And there are two different topics that I'm actually considering. So you guys feel free to give me your feedback as well now. So I'm considering discussing hiring your child in your business. As business owners, you can pay your child from your business. So I've been paying my daughter for a number of years, a salary through my business. And I want to give you guys that information. That is one suggestion for the next Fundamental of Finance series. And then the other suggestion is funding, business structuring, business structure, as well as a business funding. So you guys let me know what you think about that. I do think that, again, if you're a business owner, like it is an easy write-off. Like our kids cost so much money. And they do, help us with our business. And I think it's also really, really great to be able to have that as a tax saving strategy if you are, or to implement that as an important tax saving strategy, especially if you have children. If you have multiple children, that's even better. So you can save a lot of money. Okay. Kini said both are good. So awesome. Awesome, awesome, awesome. So again, thank y'all so very much. Again, your feedback is very, very valuable to me. And I thank each of you for taking time out of your busy day to be here and learn more information about finances. So feel free to subscribe to our YouTube channel that we're building up. This information is going to be there. If you are a little late, or if you want to go back and listen to some things, then be sure to check that out. Also, feel free to share it as well. Thank you all so very much for being here tonight, and y'all have a great day. Good night.